Yeah, thank you guys so much for coming to today's live session. As you guys know, today is September 6th. It's really our first webinar for the month of September. And eventually we're expecting things to get back to normal. It may take another 2 weeks. But for the most part, what we're going to do, we're going to look at the markets and we're going to try to find some high probability setups in the market like we usually do. So as you guys know, usually in the beginning, we try to find some momentum setups. And then after that, Marvin usually comes up and he talks about the fundamentals and geopolitical, economic stuff. And then at the end, we usually finish with talking about some setups where we're expecting things to happen from a top-down perspective. But based on how today's session would go, will determine how the flow of the meeting is. I know for the most part, there's very few setups that we're really confident in right now with the way the market's moving. And I know we do have a Bank of Canada interest rate statement coming out in about in about 2 hours from now. So we definitely have to be on the lookout for that. But in the meanwhile, there's a few setups that I do want to point out. And before I do that, I know Marvin is eager to say something, so I'm just going to give way and allow him to say what he needs to say before we dive into these charts.
I was just going to say, really, like you said, the reason why there's sort of like a limiting of trade opportunities is really because the market is focused on ISM Services PMI data. Because that's a major indicator. Well, it, of course, is tied to labor market, like how strong or solid the labor market is. It's tied to growth. So then, since the U.S. market, since that's one of the major growth engines in the global economy, most traders around the world are going to be focused on how the services sector is doing in the U.S. And that's the reason why we're seeing both, constraining of liquidity, like volatility. Like we have the Bank of Canada and the ISM Services PMI coming out at the same exact time. So we got to be mindful of that.
Yeah, so of course, we'll see limited price action until then. But it doesn't mean that we should sit around and do nothing. What we're going to do is try to find some high probability setups in the market. And the first pair we're going to talk about right now, or the first asset we're going to talk about right now, is the asset that we're seeing on our screen right now, the Euro Swiss franc. This is when we buy the euro against the Swiss franc. Well, that's what we're looking to do, actually. We're looking to buy the euro against the Swiss franc. But we're on a daily chart. I know usually we start on the 1 hour and then we work our way up. But I decided to do top down for now, just to show you how you can even confirm these momentum plays from a top down perspective. So then right here, we're looking at price. We can see that price was in this period of consolidation, and it tested this support 3 times. As a matter of fact, we could just draw in this support area right here. We can see that price tested this area, about 3 times. We can see the first touch here, price bounce, second touch, price bounce, third touch is right now. And we can see a reaction from this level. We can see the buyers come in and push price up. We could look at today's candle and see that is a bullish candle thus far. It doesn't mean it's going to close this way, but what we can see is a lot of momentum, or a good amount of momentum to the upside. So from here, what we can do is just assume that price may actually push a little bit higher, and we could see price go up to this trend line right here, because it's apparent that price is forming a descending trend line resistance. So there's a possibility we could see price bounce and test this trend line, and then from here we could see the markets fall and retest support. So of course, this is what we're expecting, a potential move to the upside. Now also, if you look at your stochastics or RSI, what we can see also in this case is some divergence right here. We can see the stochastics making higher lows, which is a sign that momentum could be shifting to the upside. So then all this stuff can help support our reason behind why we feel price could be pushing to the upside. Actually, this is what we call convergence, really. But I don't want to confuse you with that. But anyways, what we're going to do next, we're just going to drop down to our lower time frame and see what that time frame shows us. And if you drop down to the 4-hour, what we can see here is that price gave us a nice bounce to the upside. We have this nice long wick right here, which means that there's buyers in this area. We have this nice wick right here from this candle. So we have that rejection, and then price shot up, and then we had a violation. Well, not yet. Maybe at the close of the hour, price is, it broke above this high, this structure area right here. And hopefully we'll see a close, above this area, because that's more proof that we could be seeing the buyers come in and give us the move that we want to see. Of course, nothing's really guaranteed. For all we know, price could do something like this. It could find resistance right here in this area. You could look left, see that it's an area of structure, and then it could fall down and retest the lows. So when it comes to trading, it's all about having an edge, and even if you look at certain things you do over and over again, it doesn't mean it's going to work all the time. But as long as you have an edge to some degree, you could be wrong. You could be right more times than wrong. But anyway, so then we see this push to the upside. So then what we can assume is that price may continue climbing up, and what we can do is look at our next area of structure or supply, and we can see that we do have this area right here. This is what we call 4-hour supply or 4-hour structure, whatever you want to call it. But we can potentially see price push up into this zone, and then we could see a sell-off. But anyways, let me go down to the 1-hour, because that's usually where our setups are for these momentum plays. So on this 1-hour chart, we see a nice impulse to the upside. Nice impulse. A nice push to the upside. So then what we want to do, we want to wait for price to retrace and correct to an area where we could, be somewhat confident. And there's a few things you can do. Number one, we can, of course, draw out our waves. And if you draw out your waves, what you can see, let's just assume this is a high. So, yeah, and let me also potentially change the color, but we have price forming a lower low, lower low, lower high, and then price makes another lower low, and then we have this push up right here, and this forms a higher high. So then, of course, now since it's formed a higher high, we're looking for a buy on a dip in price. So then usually what you can do in this case, we can pay attention to, of course, the swings and the pivots. So we have a swing right here. Let me just draw this in. Of course, this is our first pivot in this area, and it makes sense because we have a lot of sideways price action in this area. So then usually around the midpoint of this area, the sideways consolidation is where you'll see the buyers step in. But we have this area where the buyers can step in at, and we have this potential area right here where buyers can step in at as well. But what we want to do, we want to wait for price to come to us. We don't want to chase the trade. We want to wait for the trade to come to us. So then let's just assume that we're looking at this first zone right here where this first pivot swing anchor point is. And like I said before, we see a lot of sideways price action with these sideways candles, one after another. It was trapped in the range. So then what we could do is figure out the midpoint of that range. And what I want to do is take my Fibonacci tool, take it from the low, drag it all the way up to the high of this range. And what we have is our 50 line right around here. So then what I can do is just maybe just plot a line right around here, right around there. This is our 50 line, and we can probably change the color of it if we want, make it maybe orange. And we can remove this right here. But right around here is where we could potentially see some buyers come in at. And if you look at this candle right here, this 4 a.m. candle, I believe this is Central Time, but right around here with this nice wick. This lets you know that this is where the buyers came in at. So then there's a possibility we could see price retrace all the way back down into this zone right here. So then that's what I'm going to do. I'm going to wait for something like that to take place. Let me do a little bit higher, maybe right around here. Wait for a pullback into this zone. So then this, in my case, will be my demand zone right here. This will be my demand zone. It's, you know, of course, not clear. It's one of those demand zones that is more hidden than anything. But I'm expecting price to come down here. But of course, we do have, you know, inefficiency, a gap right here. So then there's a possibility that we could see price rotate, you know, right around, you know, this area right here. We could see price, you know, rotate somewhere in this area as well. But I would like to have a nice significant pullback. So with that said, let's use our Fibonacci tool and let's see what the market gives us based on, you know, Fibonacci. So there's a few things we can do. Some people take their Fibonacci from the main low all the way up to the high, and you can do that if you want, or you can take it from this low up to this high. But for the sake of being consistent, I'm just going to take it from this low. So take it from this low all the way up to this high. And what we have right here, we have the 38.2 up in this area. We have our 50 down here. So yeah, there's a possibility we could see a deeper pullback as well. Even to this area right here. This is our second zone right here where we see this anchor point. And we see in this area, we see sideways candles as well, right, in this very same area. So then, you know, we have another area of demand that we can pay attention to as well, which is this zone right here. And this zone is right where our 50 and our 61.8% Fibonacci level is to some degree. So this is also a demand zone. And what we can do, we can just simply wait for price to retrace and come to us. We'll know which level we need to respect by the way price pulls back into that level. But for starters, our first zone is right here. So then what we're going to do, we're going to simply wait for price to come to us. We're not going to chase the trade. We're going to wait for the trade to come to us. And let me make sure this is correct right here. So in this case, this will be our first zone. We're going to wait for price to come to us. And hopefully we'll see what we need to see on a smaller time frames. So for those who know, and for those who's been with us for a while, what is our trigger time frame for a 1 hour correction or 1 hour pullback trade? Like what time frame will we drop down to in order to execute that signal and see how price is pulling back into the zone? So what time frame will we drop down to? Let me just ask you guys that question. I know this is repetitive information, but it's sometimes good to review. So then I know Greg chimed in. He said the 15-minute time frame, and yes, that's exactly what we'll be looking for. So we'll be dropping down to the 15-minute. We'll see how this pullback took place, and then we'll go from there. Also, one thing I want to okay, so then from here we'll look for a buy, and we can trade it up to this area structure if you want, or you know, we can play it safe and take out before then. But you know, for the most part, we're looking for a buy right now. We're looking for price to come to us. Now, as you guys know, oftentimes the market could be harmonic and, you know, symmetrical. So then what was done before may be done again. So in the same way there's measured impulse legs, there's also measured pullbacks. So then if you look at this one pullback right here, the length or the height or distance of it, we can take an arrow and take it from the high all the way down to the low of this correction right here. So, you know, if you drop this up to where this is right here, the high, what we can see is price can go down to this very same zone right here. Remember, there's symmetry and there's harmony in the markets. So, you know, I'm thinking that we may see something like this where we see a pullback of this nature down into this zone. And then from there, we'll look for our buy. So again, you know, I just wanted to point out how there's symmetry and there's harmony in the markets with these charts. So, okay. So again, we'll be looking to buy. And as we mentioned before, we're waiting for price to come down into this zone right here, right into this area. And then from there, we'll be looking to execute our buy. So we'll be waiting for the buyers to come in right around here. And yeah, we'll just trade it up, maybe up to these highs up here at 95.75. But yeah, what we're going to do is just look for confirmation once price reaches this zone. So what I'm going to do is also, I'm going to put an alert a little bit above here, right here. I'm going to add an alert so that we're notified exactly when price hits this area of structure on the 1 hour chart. So again, let me put the date, September 6th. And we can say price is testing 1 hour structure support. Price testing 1 hour. We're going to put if 3WP, which means if 3-way pullback. Remember, we see that on the trigger time frame. Look to buy on bull confirm. All right. So we'll look to buy on bullish confirmation. All right. So then we have that. We have this zone. And if you want to, you can do this one as well. We can place an alert there as well. But the first one that's going to be alerted is this one. So we'll see how price pulls back into this zone. And if we don't get what we normally want to see, then we'll just move on. And well, we'll just expect for price to hit this low right here and look for an opportunity. But by that time, I'll be somewhat hesitant. And there's reasons why, because of this structure being broken. Sometimes when price corrects, like let's say it corrects all the way down to this zone right here, then what happens is that this zone right here can act as resistance. So then when that happens, sometimes price will do something like this, where it will go up, test this structure area right here, and then immediately, fall down and retest the lows. So then, that's the reason why, I would love for price to just respond from this area, but sometimes that doesn't happen. Now, if we do get a deep pullback, what I need to see from this point, I need to see price break and clear this area up here first, and then look for, a pullback into this zone, and then look for the buy. So yeah, that's what I look for if we do get a deeper pullback, because if we do get a deeper pullback, then, it may let us know or show that things may be shifting and changing. So we want to be a little bit cautious with that. But all right. Are there any questions with the Euro Swiss franc pair? Going once, going twice. All right. So, all right. So we don't have any questions with the Euro Swiss franc pair. We'll be keeping our eye on this one for a while now. But with that said, let's move on to our next pair, which in all honesty, I'm not too confident about, but I'm just going to show you it anyways, because you never know. The market, even though with certain assets or pairs, you may not be so totally confident on a setup, which I'm not in either setup, not even on this one. Of course, I just know based on what I've observed that I like this setup, but it doesn't mean that it's going to work out. Remember, we separate trades into 3 categories: trades we love, trades we like, and trades we don't like. So remember, trades you love are those setups that are A+ setups. And those are the ones that you usually want to trade, especially if you're taking a challenge or funding challenge. I know I'm going off subject here, but yeah, there's been a lot of news around that particular prop firm industry. I know my Forex funds just got, as you guys, I know you guys probably heard what has happened with my Forex funds, but their accounts are frozen. They're not in operation right now. So then, yeah, we'll see how that goes. The CFTC really cracked down on them, or coming after them. So we'll see how that all turns out. I don't think it's looking good for them, but we'll see. But yeah, so you have trades in 3 categories: trades you love, trades you like, trades you don't like. And you just gotta know which setup you love, which setups you like, and which setups you don't like. And you don't want to take the setups you don't like. But anyways, let's go to the next one. The next one is Euro Pound. Let's go here. And for all I know, things could look different now. So, but let's go there. Okay. So yeah, this is euro pound, and we're looking at the 1 hour chart. And what we were going to do is look for a buy on this one. We were going to wait for price to pull back and look for a buy. The only issue with this one is that order flow is still to the downside. We still have bearish order flow on this pair, and that's mainly due to a number of factors. But yeah, like this one, usually I don't like trading in the direction of the order flow. Let me just be honest. I don't usually like doing that. But in this case, I'm just going to identify this opportunity, and you guys could decide if you want to take it or not. But yeah, for the most part, we do see price pushing to the upside. It actually broke and closed above these lows right here, this area structure, which is key, because if that happens, then oftentimes this structure area becomes support. So if you look at your chart now, what we can see this candle right here, the same 4 in the morning candle central time, has this nice wick to the downside. This is where we could see potential orders come in at. So what we're going to do is identify that as a potential demand zone. So again, we're just going to take it from here all the way up to here. And we're just going to simply wait to see if price can come to us. And it may come to us and it may not. But in this case, what we want to do is look for a pullback in price. So again, we'll be waiting for price to pull back and test our area of potential demand or structure support, however you want to call it. Let me just do this right here. And then from there, we'll look to buy on bullish confirmation, and we can target these highs up here, because there's a possibility that those highs will hold. Let me go to the 4 hour. Yep. Well, actually, yep. This is really our next key area structure up here. So it makes sense to target that area. If you're going to buy, then you could definitely target the highs. And yeah, sometimes what I like to do, I'll take this high, this candle right here, this area. And then what I'll do is I'll draw Fibonacci from the low to the high, and I'll target the 50%. So that's, oftentimes, or from time to time I do that. So then this would be our TP, right around here. And, we can just expect for price to push up and hit our area. That's if momentum is still going to, if momentum is reversing. Remember, order flow is still to the downside. We've been making lower lows, lower highs. It's just been sliding lower. The trend bias has been to the downside. So then we're trading against that trend, that bias, that momentum. But I do think we may see something like this. But since we're trading against the order flow, it's imperative that you look for bullish confirmation, especially on these setups. You have to see that on the 15-minute time frame. Like it's imperative that you see it on the 15-minute, more so than even the last setup. But from here, we're looking to buy again. So yeah, that's pretty much it. As far as momentum plays for today, we're just waiting for price to come to us. And we do have ISM Services PMI that comes out at 9. We also have the Bank of Canada interest rate statement that comes out around the same time as well at 9 a.m. So we have an eventful hour coming soon. In about an hour and a half from now, we have an eventful hour. So just be aware of that when you're trading the markets. And just know that, hey, if price isn't giving you anything right now, there's a likelihood that it's waiting for those announcements to come out. So then just be patient. Don't force anything to happen. You don't have to chase trades. Let the trade come to you, and you'll find out that you'll be more successful. You'll protect your account. You won't nickel and dime yourself to death as far as having all these small losses and chop yourself to death or whatever, or die to death of 1,000 cuts by trying to get into every move. You'll be very selective, and you'll be poised and patient and take each approach as if you're a sniper. And yeah, you do that, you'll be fine. But all right. So before we move on to the top down section, I think Marvin wants to probably share what's been happening fundamentally and geopolitically, all that good stuff. And yeah, and then we can just go from there. But yeah, that's pretty much it. So yeah, we'll see how it goes. I'm going to pass the mic over to Marvin, and he's going to take over from here. All right. All right. So yeah, so it's good to actually be back and sort of, cover some, some of the fundamentals. I know we've, been sort of away from meeting with you guys for some time. We were in August. We were in sort of like the summer vacation month. So then, and pretty much August was a really busy month for us. But it's good to be back. But now that August is over, we're in September. We're on the other side of Labor Day, and traditionally and seasonally, September is considered, a hard month. It's considered a down month for stocks. And as you guys could see, for the past few days, stocks have been trading lower. Let's see. Let me just pull up, just anything. I'll just pull up NDQ since I know you guys like trading that. Let me just do NDQ. Then just the 1 hour or the daily chart. So we can see here, of course, well, the day before, you can say it was sort of like how can I put it? Indecision. You see the spinning top right here. You see 2 days of spinning tops or dojis, but they just represent just indecision. That we see that price tested this area of supply up here, and you see that it's pretty much in consolidation around this area. So if we see back-to-back days of consolidation, and that could possibly mean that something could possibly break lower, or we're in the midst of some type of rotation or some type of change in market dynamics. And if you been noticing, with each of the stock indices, it's not that they trade too far from their opening ranges, but a lot of times they trade close to their opening ranges, and they trade in negative territory. So what's contributing to this indecision or this uncertainty? Well, let me just pull up some other, let me just pull up the Dow. Let me just do this real quick. US 30 real quick, and then the daily chart. Okay, so you can see here that this is a little bit more clear that on the Dow, we've been seeing back-to-back days of selling. Like the NASDAQ, which is primarily your big tech, your growth-based indices, like it's been pretty much sustained, like it's been sustaining some of the gains simply because of good earnings and good news coming out of the AI, semiconductors. That's what's been really propping up and supporting the NASDAQ. But, it's been in this indecision. But as you can see for the Dow has been, trading lower. It's been, selling off. We see just these back-to-back days of candle closes, and you can pretty much see the same thing even for the S&P 500. Let me just pull this up real quick. This real quick on the daily, and you can see that it's been selling off as well. So then there's a reason for what we would consider risk aversion, this de-risking that we're seeing. Like, are we in the midst of a rotation, of a regime change? And is this what markets or really analysts have been waiting for? Have we been looking to see stock market sell off as fears of global slowdown continue to pick up? So let me just talk about, okay, well, first, let me just go to our heat map. And then from there, then we're going to talk about what's really driving sentiment for this week and also for today. Because just like Melvin mentioned, we do have some major announcements coming out with the Bank of Canada interest rate decision and the ISM non-manufacturing PMI data coming out. But let me just change our screen. Let me just go to this tab right here. And let me just pull up FinViz right here, financial visualization. And let's go to the futures market here. So when we look at this futures heat map, you can see that in general, most of our US equity indices are trading in negative territory. They're trading to the downside. There's this weight, there's this pressure
on US stock indices. We can see that the only one holding up is the Nikkei, which, there's a reason for that. I know overnight that there was some verbal intervention from the Bank of Japan. So then that's kind of helping to some degree to kind of fuel some, some support, some demand for the Nikkei. But and there was actually intervention in both for Japan and China. China more so physically intervened, whereas the Bank of Japan verbally intervened. They didn't make any policy decisions, or they didn't directly intervene in the market. They just sort of released comments to sort of create the perception or create some type of feeling that would cause traders or buyers to step into the Nikkei. So then this is, the only index out of most of our global indices. Well, I won't say the only one, but on this particular heat map, it's the only one listed. But as you can see across the board, global equity indices have been trading to the downside. And if you look at the Euro Stoxx 50, you can see that has been trading lower as well. And really our VIX gauge, when it comes to how fear is priced, or sort of like our VIX, our volatility gauge, we can see that it has picked up somewhat, even though it's still at lows, like what is typically a low number for the VIX. We can see that it's picking up as traders begin to price in the likelihood that they may need to buy some type of hedge, or buy, in a sense, insurance to sort of hedge themselves from any losses that can come from their long stock position. So then we see the VIX picking up, that's in green. But we see, crude oil, which we are going to talk about in a little bit, because that's very important. And it's also one of the reasons why we're seeing this sell-off, happen for the past few days. But across our heat map, you could say that market sentiment is sort of mixed. We're seeing, a lot of our precious and, well, our base metals, our industrial metals selling off, um, which could also be a sign of slower demand or a slower growth. So we're seeing Dr. Copper in red, whereas, Dr. Russell, which really sold off massively yesterday, we're seeing that sort of, hanging there to its gains. It's not as negative as it was, yesterday. But we see these signs of sell-off taking place with most of our instruments on this futures heat map trading to the downside. Now, let me just move over to Forex real quick. The Forex heat map, so we can get an idea of what is happening in FX. And as you can see, the strongest currency for today is the Japanese yen. You remember I talked about before how the Bank of Japan, or the Minister of Finance, sort of verbally intervened to sort of prop up the strength of the Japanese yen, because they're going to need to, simply because of what we see happening with oil. And we'll talk about that in a little bit. But it's also tied to some risk aversion as well. You remember the yen loves misery. So whenever there's fear in the market, whenever there's uncertainty in the market, the yen usually is the currency that's preferred, or that you go to in times of uncertainty, or when there's fear and anxiety in the market, simply because of its low yield and its strong, solid bond market. So then the Japanese yen is the strongest currency for today, followed by the euro, which could be serving as a secondary safe haven, because it's kind of odd to see the euro benefiting, since a lot of their economic data, especially with PMI data and some of the just general data coming out of the Eurozone, has been sluggish and weak, and is pointing to recession. And they may already be in recession in the Eurozone. So then it's interesting to see that it's one of the solid currencies. It's not strongly bullish, but you can see that it's one of the stronger currencies for the time being. And then the Aussie dollar. The Aussie dollar is strong as well. So some of the strength could simply be the need for correction, because these currencies have been selling off, and it's currently in correction mode, probably in anticipation for deeper sell-offs. But as you can see on the opposite end of the spectrum, we see that the pound is the weakest currency for the session, followed by the Swiss franc, and then after that, the Canadian dollar. Wow. So that was a huge switch. The Canadian dollar just became the weakest currency right now, ahead of their Bank of Canada interest rate decision. And it's typical to see this type of pricing in for the Canadian dollar. For one, we know that the loonie is strongly influenced by oil. And as you can see, oil is somewhat pulling back, even though it's pretty strong. It's been pretty strong. It's somewhat pulling back. So then that's going to have an impact on the Canadian dollar or the loonie, which, Canada is an oil producing economy. That's pretty much what its currency is tied to. It has a strong positive correlation coefficient to crude oil. But also, the Canadian dollar is selling off probably as traders begin to price in what the Bank of Canada may do. This is part of that whole speculation where they're going to take bets, traders. They're going to say, well, we don't think the Bank of Canada is going to be too hawkish. They may be at the end of their rate hiking cycle. They may be at peak levels. They may have already reached their terminal rate, the Bank of Canada, and there may not be any room for them to do any additional hikes simply because some of the recent data that has been coming out of Canada has been pretty bad and has been soft and shows signs of warning that there's something cracking in the Canadian economy, that there could be, and we know that they've had the fires, the wildfires over the summer, the ones that happened in Kelowna and all over, Canada. So then we know that the lumber industry, has been hit, in Canada as well. But in general, the data, the housing data, the inflation data out of Canada has not been too well. So then some analysts believe that the Bank of Canada may be a little bit softer, maybe soft, and we could see odds of possible, rate cuts be brought more near. Of course, they're priced out into 2024, but there's a possibility that the Bank of Canada may need to turn dovish a lot more quicker because there's signs of crackling in their economy. So then we could see this sell-off in the Canadian dollar could be due, to that. But yeah. So there's a lot to touch on. Like I don't want to overload you guys with too much, but this risk aversion that we're seeing across the board. You remember we saw, stocks yesterday sell off. For the past few days, the Dow and the S&P 500 has been selling off. So then what's contributing to this sell-off? And there's two stories that's contributing to the sell-off. And those two stories are, well, let me just put this up. Let me just do, because there's a lot. Let me just see China, maybe economy. Let me just do, okay. I'm trying to see, okay. So some of you guys, have been following us for some time. You know that ever since the whole, removal of the zero COVID policies out of China, you remember in China, they had stricter, more harsher COVID rules, COVID lockdown rules. They were enforcing these restrictions upon the people there. And as a result, their economy has suffered somewhat. And it's been hard for them to gain traction and rebound following the whole COVID lockdowns, the zero COVID policy. So then right now, China is in a deep, I would say they're experiencing some deep structural issues because not only is there a problem with the breakdown of business activity, breakdown in demand, but also their property sector, the Chinese property uh, market is also undergoing pressure. And you remember when the red dragon sneezes, the rest of the world catches a cold because China is one of the major growth engines apart from the US. There's three major growth engines that contribute to overall global GDP, and that's the US, the United States, China, and then the entire European Union or Eurozone. Those are the three major global growth engines that contribute to about 56% of global GDP or global growth. So if China suffers and struggles, that's going to have contagion effects across the globe. It's going to have an impact. So then we see here these headlines: China's economic woes may leave US and others all but unscathed. I mean, it's just a headline, but the truth of the matter is that China is a major manufacturing behemoth, and A lot of countries do business with China. Australia does business with China. The European Union has strong trade ties with China. So then it's going to have an impact to some degree. Now, China's faltering economy may never overtake. Okay, yeah, this is all, just headlines that aren't making really too much sense. But the issues coming out of China is what's weighing on sentiment. We had some Chinese Caixin Services PMI data that showed contraction. A lot of the Chinese economy, business activities deeply in contraction territory. So that's causing some fear and some alarm. But there's also another story that's weighing on market sentiment, and that's with, let me talk about oil production cuts. Okay, so we see the top story: Saudi Arabia, Russia extend oil production cuts, and they're going to extend these cuts all the way to the end of the year. Saudi Arabia to extend voluntary cut of 1 million barrels per day until the end of the year. So they've already been doing about 1 million barrels per day. So then they're going to extend those voluntary cuts and even add a little bit more. And Russia is also doing the same thing. They're also, doing voluntary cuts. But not only that, with Russia, they're going to ban the shipping of oil. I think by 300, they're going to curb it by 300 barrels per day. They're going to curb oil shipment. So then it's as if they're trying to intentionally to create inflated oil prices. And we saw yesterday that oil prices did jump and rally to the upside. So then let me go back to our chart because I want to show you what's been happening. So let me just do this real quick. Let me see. I could do this. I could tell you. See here. This is oil futures. No, this is the wrong. This is wrong. Let's see. Crude oil futures right here. Okay. So we can see that, oil prices, did rally. They rallied all the way up to $88 per barrel. Since then, it sort of has pulled back from its highs. But the news of the whole oil production cut has raised concerns simply because if energy prices go up, if oil prices continue to go up as these major oil producing economies cut back on oil production, then what that's going to do, that's going to cause inflation because oil prices goes into pretty much everything. It's a raw input or commodity that is really involved with the manufacturing of everything. It's involved with services. Energy is a major component that drives market activity and drives business activity. So, of course, what we may see here is that as energy prices increase, as oil prices increase, a lot of those pricing pressures are going to be passed on to consumers because, it's going to be expensive to manufacture. It's going to be expensive to do business. So then a lot of those pricing pressures are going to be seen, with inflation. So then what brought fear into the market yesterday, of course, we did get the poor data coming out of China, but what sort of expedited the sell-off or sort of exacerbated the sell-off, I should say, in the Dow and the S&P 500 is the fear that inflation may pick up again. That there's this fear that as oil picks up and as energy prices continue to climb higher, then this could definitely mean that inflation in general, like the CPI, the core PCE data, could also pick up. And that may mean that the Fed and other central banks may not be able to abandon their rate hiking cycle, rate hiking regime, even during a time when all of the economic indicators coming out are showing that the economy is slowing down. So then they're going to be in a rock and a hard place in a time where PMIs are pulling back and weakening. We're seeing signs of contraction in business activity. We're seeing the labor market starting to soften to some degree. Usually the central bank will want to pull back, and this will be a time for them to sort of unwind some of that tightening and possibly a plan to, cut rates sometime in 2024, maybe the spring or summer of 2024. But right now, if we see that Saudi Arabia and Russia are going to maintain their production cuts, and there's going to be lower supplies of oil, of course, that's going to definitely increase the price of oil due to the laws of supply and demand. Due to the laws of scarcity, we're going to see oil price go up. That's going to increase inflation. And you remember the central bank's main mandate is to fight inflation. So then the fact that there may be higher interest rates due to higher oil prices is what created the sell-off in stocks. Stocks sold off as traders expected the Fed and other central banks to have to maintain a higher for longer policy, for the interest rates, that central banks would have to remain tighter simply because inflation may pick up again. So then that's the reason why we saw stock sell off in this risk aversion sort of for the, yesterday. So then we may see that to continue today if the market chooses to stay focused on those, that theme of higher energy prices. But also speaking of today, we do have two major announcements coming out in roughly an hour or two, almost like an hour and 10 minutes from now. We have the Bank of Canada interest rate decision, and we also have the ISM Services PMI data. And so then, okay, so let me just hurry up because I know Melvin, he wants to jump back on here and finish the webinar because we're going to be meeting in the private war room in a few minutes, like later on, in about an hour. So then I know he wants to jump back on here. So I'm going to actually run through this real quickly. But the Bank of Canada is expected to keep rates on hold. So that's already priced in to the loonie at the moment. It's priced in that they would stand pat. They're not going to hike rates. But it's going to be interesting for us to hear their rhetoric or how they guide policy, even in their statement, because usually Canada, what happens in Canada can also be a harbinger of what could potentially come in the US. Like Canada economic data and Canada monetary policy, in a sense, has served almost like a leading indicator of where the US is going. So if we see softness in Canada and weakness in Canada, if we see that the central bank policymakers have a more dovish tone and they're sort of concerned about growth in the economy, they speak with a little bit of worry in their tone, then that could be a harbinger that will eventually happen in the US, since both economies are sort of joined at the hip. Since Canada is, one of the US's, biggest trade partners, since, we're close, we're connected by a border, what happens in one economy does affect the other. So if we do see a drop in, buying consumption, if we do see a drop or slowdown in activity in Canada, that's going to definitely, impact the US as well. And just like we would see from Mexico, if we see a drop in manufacturing activity or whatever, oil activity, just whatever, then that would definitely impact the US economy as well, since we're separated by a border and we're strong trading partners. So then we're going to be paying attention to that. If I were you guys, I would just wait for the policy statement to come out and just kind of monitor price, see what happens with the Canadian dollar. And then from there, once things settle down, then you can execute your trades in the loonie. But, we also have another announcement coming out around the same time, and that's the ISM, manufacturing, non-manufacturing. Let me just do this real quick. Let me just do this real quick. Let me just go to just one of the charts. Let me see. I'll just do daily FX right here. I think that'll just be better so you guys can see this for yourself. So yeah, so then we have two, before then we had the S&P Global Composite and Services PMI, the final reading, which would definitely provide some clues on what the ISM Services PMI data would be, a few minutes later. But we have, these two coming out first, and then the Bank of Canada interest rate decision and the ISM Services PMI coming out, like in an hour, like a little bit over an hour. So for the ISM Services PMI, You got to keep in mind that the services sector is the largest component of the U.S. economy. You remember, we pretty much exported our manufacturing or contracted or outsourced our manufacturing overseas. Like, we have manufacturing here, but that's not a strong contributor of GDP growth. Really, the services sector in the U.S. is a stronger contributor to, U.S. GDP. But you can see here how we're going to see it expand. The services sector is still in expansion territory, but the pace of expanding is getting slower and slower each month. We see that, the forecast is that it would go from 52.7 down to 52.5, which doesn't look like much, but it is a slowing down of the services sector. But it depends on what the real number comes in. If it comes in much lower than this, if it comes in at 51 or 50, that's definitely going to be interesting, because what it reveals is that what the Fed has been doing with rate hikes for the past year, that has had an impact on business activity. That we've seen the higher interest rates are sort of the bleed through the economy and work their way to actually quell growth, crush demand, crush business activity. And we'll, definitely read more into this report, because in this services PMI report, there's different subcomponents that come out. We have the employment subcomponent, new orders, which is reflective of demand or growth, services prices, which is an inflation barometer, an inflation gauge. So then we'll be looking at all of these indicators within this ISM Services PMI report. But that will be coming out in over an hour. So then the reason why we're not seeing too much activity is simply because the market is sort of waiting on the sideline for this data to come out. But yeah, so then this is the major news for today. Beyond that, we don't really have much. We have the Fed Beige Book comes out in about 5 hours. And then after that, and that'll be the end of the U.S. session, and we'll be going into the Asian trading session. But these are the only two, data prints in the U.S. docket that's really important. So yeah, but that's pretty much it for the fundamental analysis part. I know I kind of went a long time. I apologize for that. But let me just return the screen back to Melvin and let him take over for the rest of the session. So, all right. Yeah, all right, guys. Yeah, I'm not going to be in front of you too long. I know you're definitely going to hit the private war room later on. But I'm going to make this quick. I'm just going to go over a few pairs, a few assets. Definitely want to go over the Dow and the NASDAQ. But I'm going to make this real quick. So then just bear with me. I'm going to respect your time. But all right. So then the first one we're going to do, we're just going to focus on currencies. And before we do that, let's go to the weekly. And then we're going to go to the Kiwi CAD, NZD, CAD, Kiwi CAD right here. And this is the weekly chart. And as you can see, of course, we already have it drawn. Price is testing this weekly zone of structure. And, of course, this is pretty interesting because, we've been moving down, but it hasn't really been a strong move. Order flow, according to the weekly, is still to the upside. So there's a possibility we could see price rotate to the upside and, over the next few weeks, push higher. There's that possibility. However, when you zoom into this section right here, what is it about these last few weeks candles? Like, are they moving up? Are they moving down? Or are they moving sideways? You tell me. Like, if you look at the last 4 weeks, like this is this week, this is the current candle. Then we have last week, the week before last right here, and then 3 weeks ago, whatever. What is it about these candles that we need to bear in mind? What is it that we see? So then I know Adam said they're moving sideways, and exactly, they're moving sideways, which means that we can pretty much say there's consolidation. It's consolidating. It's moving sideways, and we're going to see a breakout either to the upside or to the downside. So, in this case right here, the low and the high of this consolidation defines the range. So, if you wanted to, it's not saying you have to. You can just say, let me just place an alert right here at the high, and I'll just make this any color, and then a horizontal ray at the high, and then a horizontal ray
at the low. So that we know that there's a range right here. Now, this is the weekly time frame. We can identify and see this range. But also we see some hidden structure right here. We see two doji indecision candles right here. One right here and one right here. I forgot what this one is called when it's more closer to the bottom, the body, but we see indecision right here. So then this lets us know that this is likely to be a nice area of supply as well. So then, you know, we just need to bear in mind that. What I may do is draw in something small, you know, right around here. I'll just do something like that. Maybe make this red. All right. But anyways, let's zoom out and let's drop down to the daily. So, all right. So then right now on the daily, this is what we see. For some reason that image didn't show, but it's all good. So right here, we see this consolidation a little bit more clearly. It's obvious that price is bottoming on the daily, and it's in this accumulation phase at this support. It's trying to gather orders to what I believe break to the upside, but you never know. Price could break to the downside, but we're in this period where price is trying to gather and accumulate orders, and it could either accumulate buy orders or it could be trying to accumulate sell orders, which is distribution. That's called distribution. But for the most part, we see this happening. So there's a possibility we could see price push up and at least test these highs. So let me just draw in something right here where these highs are so we can know. Okay, so right around here. Hopefully this will hold on our next lower time frame. So then right here, we see that price is consolidating. We also see what appears to be divergence right here. We can expect a momentum shift. The reason why we can say that is because the market has been making lower lows, but at the same time, it's making higher lows on the stochastics. And whenever you see that, this is like called bullish divergence, or another phrase is convergence, because these two lines are converging with each other. But, you know, I don't want to get into that. The point is this, is that we could potentially see price rally to the upside. And that is what I'm anticipating for this particular setup. So let me go back to normal, bring this down right here. So there's a likelihood that we could look for a buy right about now in this area, right where the lows is right now. So what I want to do is drop down to the 4 hour. And this is what I'm expecting on the 4 hour. I'm expecting for price to do something like this, where we had this correction. Price is going to come back, test this area again, and we're going to see 4 hour bottoming. We're going to see bottoming on the 4 hour, because what you have to understand is that the market tends to leave footprints, and it tells you what you should expect. So it's like the last time we was here, we was anticipating this 4 hour reversal. Price did that. We had a break to the upside of these highs right here. Then we had a pullback, a deep pullback, and then price eventually did push higher. But we can see here that price respects this area, and it usually consolidates on both the daily and the 4 hour. In this case, we're looking at the 4 hour. So I'm thinking that we're going to see price consolidate or create like a double bottom, or maybe even an inverted head and shoulders before we see the push to the upside. Let me see, is there another zone area? Okay, yeah, right here. So then right here, we do see some consolidation. We see price break to the upside, 4 hour reversal, and it kept pushing up from there. Right here, we see the same thing, 4 hour reversal, price broke, cracked above these highs right here, a break, pull back, test this structure, and then push up. So of course, this is what we're expecting. Remember, the market leaves footprints. If you don't know what to do, look at price history, because price history can give you a clue on what to expect in the near future. So then right now, what we're expecting is this type of behavior, an eventual reversal or bottoming pattern, either double bottom or inverted head and shoulders. And as soon as you see that, you can just look for a pullback and then trade it up to this zone right here, because there's no guarantee that we're going to break through this zone. So then, you know, we can just be more cautious and look for that to happen, or exit when price reaches that particular zone, or take partials. But yeah, this is the Kiwi CAD. This is what we're looking for right now. I know some of you guys are thinking, okay, well, is it okay for me to sell? Well, you can if you want. You can sell down to these lows, but it's risky. It's quite risky for a number of reasons. So for instance, let me delete this. So we do have this 4-hour correction, right? But looking at this correction, we know that we have some internal demand, you know, right around here. This is what we call internal demand. And you know, in order to know for certain, price, we have to clear this entire zone. However, this entire zone, by the time it does that, we're at this area of demand, and you can see buyers come in again. But also, if you was to drop down to your 1-hour chart, right now we only have one leg A. Remember, on every pullback, we typically see a 3-way pullback where we see a leg A, a leg B, and a leg C. And it doesn't happen every time, but it happens about 70% of the time. And then from there, you'll typically see price reverse. But yeah, that's what we'll be looking for anyway. So then, you know, we're not looking to buy. If anything, you want to, I mean, we're not looking to sell anything right now. If anything, you'll be looking to buy. Maybe on a dip, you could look for a 1-hour pullback if you want to. Look for a 1-hour pullback and then, you know, push higher if you want to. But for the most part, we're expecting 4-hour bottoming. That's what we should wait for. So if you don't know how to wait long enough and you want to at least get something in, then, you know, you could look for a buy setup on the 1-hour. However, there is some risk with that. But again, going back to the 4-hour, we're primarily looking for a 4-hour reversal signal for price to touch this low, come back, break the highs, and then give us a nice buying opportunity on a pullback in price. And we can trade it all the way up to this area right here. So yeah, that's the Kiwi CAD. Are there any questions about that before we move on? Going once, going twice. All right. Okay. So yeah, let's hurry up and let's do the US 30. And let's start with the daily on that one. Go to the daily chart, US 30. Probably could go on the weekly as well. That'll probably be better. Let me just do this one. Recap. All right. So right here, what we're expecting price to correct. This is what we talked about, I think, you know, a few days ago, and then push to the downside. However, how price corrected is quite interesting, because what we know from here, let me just delete this. What we know from here is that price has created an area of demand on this daily chart right around here. This is a zone of demand that is testing right now. So anywhere within this demand is where buyers can eventually come in and create a bounce to the upside. In other words, we can get another retest of these highs before price slides down again. That's something that we could see. And remember, on every pullback, like this is a daily correction, we want to see 3 waves on a smaller time frame. So again, what is that time frame? On a daily pullback, what time frame did we drop down to in order to see how price formed that correction or that pullback, and at the same time look for our trigger entry? Like what time frame on a daily pullback, daily correction? Because when you do top-down analysis, it's important for you to know these things. So then let me just see what you guys said. So then, okay, yep, Naomi said 4-hour, and she is correct. So then that's what we're going to do. We're going to drop down to the 4-hour and see if we see a 3-way pullback. Do we see a 3-way pullback? Let's see. So on the 4-hour, we're on this chart. right now, do we see a three-way pullback? Let me delete this. I know we have a lot of boxes here. This is from our earlier analysis. But do we see a three-wave pullback? As a matter of fact, let's just do the Heikin-Ashi because maybe that can help you even more. Okay, so based on the Heikin-Ashi, which it does help, do we see a three-wave pullback? Yes or no? Let me see if you guys remember. Yes or no? Based on what we see with Heikin-Ashi. And based on what we typically want to look at. Well, I guess since no one's chiming in, I know Greg said yes, but I'm going to say no. The reason why is because based on Heikin-Ashi, we have one leg. Leg A. This right here is leg B. And we need to see a leg C expansion. So then it agrees with what we've always mentioned, that, you know, even on that daily time frame, we're expecting this area to act as demand and for price to push up. Now, we can get a deeper correction down here, but price still needs to create that C leg. So then what we're going to do is just look for opportunities to for a reversal to happen really, really soon. That's what I'm going to look for, is for a potential reversal to take place soon. So again, we have this trend line right here, but price could actually shift before then. But what I'm expecting is another push or bounce higher. So by the time the market opens, well, it all depends on how the market opens. If it opens strongly to the downside, then we may see a continuation of that momentum to the downside. But if it bounces to the upside, then that's news to us that, hey, price could be shifting and reversing. So then what you could do is look for something like this. Price breaks this trend line, pull back, and test this area right here. But yeah, that's what we're looking for right now on this particular pair. As a matter of fact, let me go to the 15-minute, see how the order flow is looking from a 15-minute perspective. Because I don't think I modified this. Yeah. Okay, yeah. Okay, yeah. So yeah, I definitely have to modify this. So let me do that now. So in this case, yeah, we can probably look for buys earlier because this right here is our low. I need to actually remove this alert. And up here, let me just grab our order flow high. This right here is our high right here on the 15-minute chart. So if price breaks above this area, then we can look for buys. So we don't have to wait until price breaks the trend line, which is up here. We can even look for buys even a little bit sooner. So yeah. Yeah, so then yeah, we'll be looking for that to happen. Let me go to the Heikin-Ashi to see how that looks based on the Heikin-Ashi. Yep. Okay, looks fine to me. All right. So yeah, in this case, I'm thinking price could reverse. So we could see this for the remainder of the day. We could see price. If price does break this order flow high, then we want to look for buys. And then that's when we'll just ride this move to the upside because we're expecting price to create that C leg, that push up on the 4-hour or the daily time frame, that move up. So then we'll be buying for a while now if price does break this high. But it all depends on how the market opens. But then this is the Dow, the US 30. So if you don't have any questions on this one, then we can definitely move on to our next setup, which is the NASDAQ, which Marvin talked about earlier. Let's go there right now, NDQ. And we were on the daily time frame, and as you can see, price pushed up right here, and right now we're in this area right here where we see consolidation, sideways price action for a few days. And when you see this type of indecision, the market is waiting for something, because the market just doesn't move sideways for a number of days like this and these doji candles just for nothing. It's waiting for something to happen. It's waiting for more clarity. So in this case, what we can do is simply wait for that clarity. But in either case, what we can assume is that, hey, this is an area of internal demand right here. And if you do get a sell-off, there's a possibility we could see price react to this area and then pop higher. But we see that we have this move to the upside, this correction. As a matter of fact, let's go down to the 4-hour. You know, we have this correction, which we sort of predicted, because, you know, this move higher right here, this move was a one-to-one measure move of this leg right here. It's a one-to-one. So then, you know, usually when you get that three wave, that one-to-one measure move like that, then oftentimes you'll see a reversal. You'll see some type of correction. So then that's what we're expecting here. So again, well, I can keep this here because really this is the low of this whole consolidation. And if we see a break to the downside, which is what I'm expecting. As a matter of fact, let me get rid of this. If we see a break to the downside, then, you know, we can definitely look for an opportunity to sell and, you know, take advantage of this nice sell-off. So yeah, we'll keep you posted on what we decide to do. Of course, we're going to look at this in more detail on our within the private war room. But yeah, that's pretty much it, guys. I don't want to take too much of your time. I hope today's session was helpful. Remember, we're going to go over some of these concepts over and over again so that it can become second nature to you. But are there any questions before we close out? Or are there any assets that you want us to take a look at? Any currency pairs, any assets, any instruments that you want us to take a peek at before we end? I'll give you guys a few seconds to chime in. But if not, then all is well, all is good. So yeah, it looks like we don't have anything for now. So I guess we can close out for now. But yeah, well, I guess thank you guys so much for coming. We really do appreciate you guys. And like we mentioned, we'll be in the private war room. We're going to jump in there like around 9 o'clock in the morning or a little bit after 9. So then we recommend that you join whenever you can. But yeah, Marcus, I think he's going to be in there around the open. So you guys can definitely join him around the open. So yeah, I know Marvin wants to see if you have something to say. Like I know he's telling me, Marcus, do you have anything you want to share with the group? If so, then that'll be great. We can definitely unmute your mic, or I think you can do it on your own. That's if you do have something you want to say. If not, then all is good. I know you're probably busy looking at the charts right now. Yep. So Mark.
Yeah, I'm actually going to probably be waiting until the news hits at 10, so I'm not going to be in there early today.
Okay, that's totally fine. So then we'll be in there around the same time. So then everyone, yeah, let's just meet 10 Eastern, 9 a.m. Central. And, you know, we can definitely look at the charts and see how the market responds. But yeah, that's pretty much it, guys. I hope you guys got something from today's session. But thank you guys so much for coming. And like we always say at the end of every single meeting, remember to always count your blessings, not your pips, not your points. And we'll definitely see you guys in the room if you do decide to join us. Of course, we do recommend that you join us. But if you can't, then all is well, all is good. Those sessions are not recorded, but these sessions are. But thanks again, and we'll definitely talk to you guys soon. Have a wonderful, blessed day. All right, talk to you guys later. All right, bye.